to State of the World 2011. We are speaking to Dr. Stephen Roach and Robert Schiller, both currently professors at Yale. Dr. Roach, as crude reaches out to $90 and copper, for instance, to $9,000, there is a fear that 2011 could be the year of big commodity inflation, especially because of QE. What are your views?
I think economically sensitive commodities, oil, energy, base metals, other types of construction or industrial materials, I think they're going to be range bound for the next few years. There'll be times when it looks like the world is snapping back, and at that point commodity prices will firm aggressively. There'll be periods like we saw repeatedly in 2010 where there'll be concerns of a relapse or a double dip. At that point, commodity prices will fall. So I think the range-bound image is the one I would like to convey in terms of what the outlook is for a broad basket of commodity prices.
Well, let's then come to Europe. Dr. Schiller, do you think it's almost inevitable that some sovereign debt recast will happen in 2011?
Well, I think it's likely that big bailouts will be needed. It's looking more uncertain, and I think investor confidence is becoming volatile. The big question is whether the euro will fall apart and whether we'll see countries dropping out of the euro system. I don't have a crystal ball. If you tell me my guess or my bias is that the euro will survive this, because I think the euro has become a symbol of European unity that is very important. And I know the Germans are upset, and some of them are doubting. A lot of German voters say, "Why did we ever go into this euro thing?" But I think that when it comes down to the final analysis, we'll decide that we should keep it. We should stay connected. Not we, the Europeans should stay connected. And the euro is an important symbol of their connection.
Dr. Roach, you think the euro will hold?
I think the euro is going to hold together, but I have to concede that the risks of some type of a European breakup are a lot higher than I ever thought. To me, the euro is a political experiment, and it was always based on an inconsistency between monetary and fiscal policy. But I think the political will to hold it together was always much stronger than this economic inconsistency. But I have to say that based on some of the responses of core European nations, such as those in Germany, do give me pause for thought, and just maintaining that nothing will affect the existence of the euro.
Right. Dr. Roach, on the currency, recent signs of recovery in the U.S. stocks has strengthened the dollar a bit. How do you see the currency broadly trending in 2011? I mean the dollar.
The dollar peaked in February of 2002. And over the ensuing 8.5 plus years, it's been down about 23-24% on a broad trade-weighted basis against all of America's major trading partners. Some years it's down a lot, some years it bounces back up, but the general drift has been a drop of about 2.5 to 3% a year, and I think that's what's in store over the next several years as well, given America's outsized current account deficit.
Well, Dr. Schiller, I would like to get back to your thoughts on the U.S. This is a slightly longer-term question. Do you think the U.S. can slide into a Japanese kind of, prolonged slowdown? Do you think that situation is possible?
Yes, it is the big worry. The Japanese situation that you refer to is that after their twin bubbles in the stock market and the housing market in the 1980s, those bubbles burst at the beginning of the 1990s, and the Japanese economy went into a funk, and it's been in a funk for 20 years. Home prices in major Japanese cities, or urban land prices as they say, has fallen fell every single year from 1991 to 2006. That was 15 years. It's really instructive to consider that such a thing could happen. Now, why did it happen in Japan? That's complex, and there's different interpretations. But I think part of it is that it's just that there was overconfidence in the 80s and then a reaction against business confidence in the 90s. And it lasted a long time. And that is the worry that we have in the United States and Europe and in other places around the world. Not India particularly, but in other places it's a worry.
No, but some people have argued, Dr. Schiller, that the U.S. is different. The animal spirits in the U.S. are more alive. It's a more open economy. Would you say, therefore, that this is an extreme situation, extreme expectation that a Japanese kind of situation could unravel in the U.S.?
Well, of course, the Japanese experience is almost unique in world history. Having a slump lasting 20 years is not normal, and it's not something that I should predict, and I actually have not predicted a 20-year slump in the United States. But it does, though, call into mind that some kinds of processes are slow-moving. Notably, home prices, even in the U.S., if you just look historically, we saw a boom. Well, think of this. The last peak in home prices was in the U.S. was in 1990. And home prices didn't start going up again until 7 years later, 1997. So we had a 7-year slump in the U.S. housing market. So it could happen again, and that's the worry. We had a peak in the housing market in the U.S. in 2006, and it was falling for 3 years then after that. It picked up then with the Obama stimulus, but now it's seems to be heading down a little bit again. So I'm worried that downtrend might continue for years to come still.
Dr. Roach, your thoughts on this issue. How prolonged can the U.S. slowdown be? Do you have these Japan kind of worries?
Well, Japan has completed 2 lost decades and could well be in a third one right now. I have warned repeatedly that the United States failed to learn the lessons of Japan, allowed asset bubbles, credit bubbles, to end up seriously distorting its real economy. And it may well be that we pay a Japanese-like price, especially given our sharply rising public sector indebtedness, whereby our growth rate stays surprisingly sluggish for a much, much longer period of time than people think.
Well, those are sobering thoughts, Dr. Roach, Professor Schiller. Many thanks for joining us on this show. And that's it on this edition of State of the World 2011. Thanks for watching.